Welcome to Trade Pro. In this video, I'm testing the highest profiting strategy I've shown on my channel so far 100 times in a row, but this time with the money flow index instead of the relative strength index. Many people would say the money flow index is superior to the relative strength index because it includes volume data in the equation. Another highly debated topic in the Forex trading industry is, can you actually rely on Forex volume data since there is no central authority for that volume data? I say the answer is yes, especially with exchanges like Oanda that are huge. I would say that the volume data provided by the individual exchange is relevant, and you would not get much of a different result if you were to compile all data from all sources for Forex trading compared to just Oanda price data and volume data. Okay, so that's just my opinion on the matter. Anyway, I'm going to go over a few of the setups, show you the strategy, how I'm going to be doing the test, and then do the 100 tests and show you all the results at the end. All right, so now I'll go over the strategy rules so you know what I'm actually testing for and show a few examples for you. So the first thing you need to look for is the trend direction, and you're going to do that with the 200 period EMA. When price is under the 200 EMA, you're only looking to short, and when price is over the 200 EMA, you're only looking to take longs. In this example, the next thing you do is look for hidden bearish divergence since price is under the 200 EMA. If price is over the 200 EMA, you'd be looking for hidden divergence, but hidden bullish divergence. And you're going to do that with the money flow index. So essentially what you're looking for here is a lower high on price, but at that same time, a higher high on the money flow index. So if we take a look at this entire last pullback, you can see the high point for the money flow index. You want to draw a horizontal line across and see if this lower high has broken that previous high. Even though price is making a lower high, the money flow index is made a higher high. That is hidden divergence. Okay. So once you notice that, the next thing you look for is the stochastic cross down to give you the short entry. So in this case, the entry candle is right here on this. You simply are going to set the stop loss just above the stop loss indicator, and you're going to use the swing highs stop loss indicator placement, not the entry candle. Okay, so I'll show a couple more examples so that it makes sense, and don't worry, I'm going to show the indicators values and where to find the indicators as well. So let's go to the next example to the left here. So here's another example, and you can see that we have the hidden divergence in place. So there's a lower high on the price action, but at that same time, there's a higher high on the money flow index. You then wait for the cross down on the stochastic, which happens on this candle right here. So that's your entry. And your stop loss is going to be placed at the highest point on that stop loss indicator for this swing. So in this case, it's looking good, targeting 2 times risk. And then I'll show one more example here to show what I'm going to be testing for. So in this example, you can see we have this pullback, get a lower high, but at the same time, money flow index makes just a higher high compared to the highest point over here on the money flow index. So on this one, you can see that the stochastic has already crossed down when it makes the hidden divergence. So you need to wait for the next cross down. That happens on this candle right here. Stop loss goes to the highest point of this swing, and using that stop loss indicator to give a little breathing room and targeting 2 times the risk. So yeah, that's what I'm going to be testing for using a 1-to-2 risk reward ratio. And let me show you the indicators here. So stochastic is just the basic stochastic. The settings are 14, 3, and 3. Money flow index is also default 14. And then the stop loss indicator, I'll show you here. Right here, ATR stop loss indicator, Edgar _Tran _ something. and I'll show you the settings on it. I changed them. So it's 14 period ATR length, and then multiplier is 1. So those are not default settings. All right, and then just 200 EMA, and that's it. So I'm going to do the 100 test now, and we'll see if this beats out the current highest profiting strategy test. All right, the results are in, and they are good, but not quite as good as the test done with the RSI in the original video. The only other difference, other than switching the RSI for the MFI, is that I added a little stop loss buffer on top for this test. In the first original, I placed the stop just right above the swing high before the entry. And this one, I added a little buffer above that swing high, and it did save a lot of trades on this test. So this test actually would have been worse off if I had used the original method of placing the stop directly above the swing high. Just the way that the MFI gave signals, it would be very funky at times. So it really helped having that stop loss buffer on this test. So I don't want to hear anyone saying that it was worse because I used that buffer. It saved a lot of the trades, and almost 0 times where the profit target was not hit due to that buffer being in place. So price has to travel farther, obviously, if you have a farther stop loss. But it was only a couple times where that happened, but there were many times where it saved the trade from being a loss, and it actually ended up being a winner instead. So just to be clear about the differences in this test versus the original. So another thing was the time for 100 trades. So this one took 8 months. The original, done with the RSI, took 6 months of price data. Then there were 48 winners and 52 losses on this test, while the original with the RSI had 54 and 46. So RSI test was quite a bit better there. Not enough where you can really make a strong case for the RSI being much better with this strategy, but decently better. It's just kind of a hard thing to make a good conclusion with, because this is only 100 tests, and each set of 100 tests has such a variance in the results. So I just can't make that conclusion, as this is still within the realm of normal variance within each set of 100 tests. Okay, hopefully you understand what I'm saying. Most wins in a row is 5, and most losses in a row is 6. So the RSI test was 4 and 4. So RSI still seems a little bit better there as well. And then the gain on the account, 44% here and 62% on the RSI test. So quite a bit better and on the RSI test. And, you know, once again, it kind of falls in that range of normal variance between each sample size of trades that you test. So I can't make a conclusion on which one's better based on this. It's just not that big of a difference. It's almost there, but it's not quite. I can't really make that call. So I'm going to have to call it a tie for now. Yeah, I mean, maybe over a series of 1,000 trades, they come out with exactly the same results. So yeah, it's hard to make that call. If this was 30% gain on the account, I could easily make that call, but it's just not, and it's like almost there, but it's not that big of a difference where I can really make a strong call. Maybe at most I could say the RSI strategy is a little better. I mean, I've used the RSI for a long time, and I like it. It's always been great. I've tested other indicators, and I've always gone with the RSI. So I personally choose RSI, but I don't think it's all that much better. So yeah, that is the test. You know, the MFI was giving me some funky signals that were kind of bewildering at times. The way that it moved was kind of odd, but yeah, it still did a good job overall. All right, here it is on the spreadsheet, falling at spot number 7 out of 51 strategies tested. Seems like I need to make a milestone video called I tested 50 trading strategies and this is what happened, or something like that. But anyway, this one did very well, and obviously can't knock out Mr. First Place up here, but that's a tough one to beat. Hopefully after seeing 51 strategies tested on this channel, you guys have been able to bring your expectations down from the moon into the atmosphere, maybe even into the clouds. And if you're really lucky, even back down to the ground. But hopefully you realize now that you're never going to get a 1-to-2 risk reward ratio where you have 70% or 80% win rate. It's just never going to happen. It's not possible. It doesn't exist. So hopefully some of you have realized and gotten the expectations back to reality. I think that you should be aiming for a 50% to 60% win rate if you have a 1-to-2 risk reward ratio. But yeah, so that is it. Calling it a night. If you guys like the video, make sure to like the video and subscribe if you haven't already. Comment down in the comment section. No longer on the moon if you want to help the algorithm out. Thank you.